Permissionless 4 is right around the corner, June 24th to 26th in Brooklyn, New York. We're seeing new crypto applications cropping up all over the place right now, and this conference will be a place to get developers, investors, and founders all in the same place to have high-signal conversations about what crypto's future should look like. This one's for the memers, the dreamers, the builders, and the token lovers. Don't miss out. Plus, you can use the code Lightspeed10 for 10% off at checkout. Hello and welcome back to another episode of Lightspeed. I'm your host, Jack Kubanek, joined today by Ryan Connor, head of research at Blockworks Research. Friend of the pod. Ryan, thanks for coming back on the show.
Thanks for having me. Pleasure to be here, man.
Always good to have you on. Today, we want to talk about Believe, which is a new Solana app that is the talk of the town. It's a new kind of meme coin launchpad that gives you pseudo equity in startups. I tweeted this morning that of the top 25 new Solana token launches this week, 14 of those 25 came from Believe. Only 7 of them came from Pump.fun, which is a big anomaly if you look at the past year of meme coin trading, which is one of the biggest uses of the Solana blockchain currently and for the past several months. Believe has seen $724 million in 24-hour trading volume, according to Believe Screener, which is a tracker someone made that's been going around. It's also been very lucrative for the creator and wonderkind Ben Pasternak, this Zoomer founder who I think is like a year older than me, but already has previously founded an alternative food startup that had like fake chicken nuggets called Nugs, which I think is awesome. And now he's doing this. It was previously known as Clout that people might remember from a few months ago. I actually tried really hard to buy the Pasternak token when Clout was big and I failed. And now I'm kicking myself because could have been a good investment. But that kind of lays the land here. Ryan, I think you're maybe more of a fan than me of Believe. So I'll just start simple. Believe is a meme coin launchpad. There are many meme coin launchpads. So why is this one special?
Yeah, I think it's a question worth asking. I think, like, to preface it all, I think that it's very easy to say that a startup is going to fail, and I always have to constantly remind myself that. So it's helpful to separate the bad ideas that are just never going to work from the things that, if you squint and if they execute the go-to-market correctly and they do the right marketing, get the right viral loop going, that the thing, you can actually see the thing having legs. And so I firmly believe that Believe is in the latter category. I do envision a world where this could work out. And the reason why it's not just another meme coin launchpad is, I think, kind of 2 reasons. The first is that there's a clear distinction in terms of the go-to-market strategy here that makes a lot of sense. And the go-to-market is to target a supply side that is essentially indie app builders and growth hackers who historically either under monetize or can't monetize. And to be able to do that via tokens is an interesting unlock for that group of builders. The second reason is that there's a curation level on top. So if you look at the problems with launchpad platforms in the past, or, I'd say a common gripe against launchpads is that the curation level, or the curation layer, is absent. So Pump is extraordinarily successful. I think it's going to continue probably to be extraordinarily successful. I'm a big fan. But some people won't participate because they can't play the trench game, right? And they don't want to play the trench game. And I think that there is a sliver of the market that's looking for a more curated experience. So if you combine indie devs on the supply side plus a curated experience for users, I think that you potentially have something here.
Maybe to just quickly give an overview for people who are not, who have their head under a rock a little bit. The way that Believe works is anybody can launch a token with it if you tag at launch a coin or something like that, and then put the ticker and the name of the token. So anybody can. But the curation that Ryan is speaking about is that the Believe team will kind of filter through all the tokens that are launched and ones that are attached to interesting startup or app ideas. They will feature on the Believe app, which is like an iPhone app that's pretty nice to use. It looks kind of, I don't know, Robinhood-esque or something like that. Just like a nice UI crypto app that looks very similar to Clout, which is what they launched a couple months ago. And so the curation is specifically for founders, and it's kind of this where a lot of the trickiness comes from, I think, is that it's sort of like a equity, not equity. You get to place a bet on the company. I think something interesting that I noticed this morning was when I downloaded the app yesterday, it said like, bet right, become a billionaire, and place your bets on people and their ideas or something like that. And those screenshots have been removed from the App Store. It now just kind of says like, believe, download this token Launchpad. So I think they're really trying to scale back on some of the equity-like language that could get them into legal issues. I think the big question then, Ryan, is why should venture-like projects be funded with meme coins? Like, that to me just seems like it's not a great match, but convince me.
Yeah, so that's actually, I'm glad that you said that, because that is not the right framing. The interesting thing about the supply side here is that they cannot get venture funding, and venture is not interested in this cohort. So the reason why this is so exciting to me is that empirically you see these indie app devs kind of being targeted by Believe to launch their tokens there, and they're launching these tokens alongside an indie app project. So like, what are indie app devs? These are people that don't work for a company or have a side project, and they are launching anywhere from 1 to a handful or a couple dozen apps per year in order to generate some income for themselves and potentially get like a very high value exit. So if you look at like Steam, they put together good data on this. The vast majority of indie app devs on a per app basis make like less than $1,000. The top decile earners will make somewhere 150,000, 180,000 on a per app basis. The top percentile will do 7 million in revenue. That's top percentile. So all of those, from an indie app dev perspective, like far less than 1% of the apps that they make can realize venture-like outcomes, so they don't get venture money. These guys do not raise money. They don't do any marketing spend. They simply engage in viral and highly targeted marketing across very narrow niches of consumer segments to make these apps go viral and make a little money on the side or potentially get a big exit. So the only way that they can monetize is through the free cash flow of that project. And they have no ability to monetize any equity or raise any venture capital to eventually like become a bigger app and then, sell that into IPOs or M&A or whatever. And that's like, I think the thing is like, that kind of business outcome is okay. It's actually like fantastic. If you create a application that generates a few 100,000 or a few low single digit million in revenue per year, and it has no potential of being the next Facebook, that's actually a really fantastic outcome. And you will all likelihood not be able to monetize your equity value. And I think that if you squint, you can see some future on this platform where they are in fact doing that. So this is like, I think this is fundamentally an underserved segment of capital markets. And there's latent demand on both sides, right? There's latent demand on the supply side to want to monetize some equity or to raise small amounts of capital and then monetize that equity. And on the demand side, there's clearly demand for retail to get venture-like upside in these kind of like small cap projects. And you see that, you saw that in COVID trading, you see it in crypto markets, like that's very much there. So there's clearly strong demand on both sides of the equation. And that's what's so exciting to me.
No, totally. Understood. And I would underscore your earlier point that it's easy to be a pessimist. It's like hard to be an optimist in some cases. And I think that I have many qualms about Believe, candidly, but like again, you want to give these things the benefit of the doubt. And it's like a lot easier to just be skeptical of everything because you'll be right most of the time. But like, where's the fun in that?
Yes.
My version of squinting at this thing is that it's capital formation in the vibe coding era, because it used to be, you have an app idea, you go maybe raise for it, spend a number of months coding it, creating a working app, maybe bring it to market. It's kind of more difficult to interact with your users and see what they actually want. So there's all this friction around like actually creating the app and just a lot of busy work that goes into it. Now, if Cursor and these other tools get a lot better, you can create a new app in minutes. And so the actual like human capital, like having to create the thing isn't as important. Now it's do the ideas work. And meme coins are a similarly very fast, kind of instant form of capital formation. So it's like a founder can vibe code an app, or come up with an idea, I guess, launch a coin based on it on Believe, see if it resonates with the market. If the meme coin trades really well, okay, I'm going to create this app and bring it to market and see if it works. If the token for the idea doesn't trade well, then you know that maybe you should put your attention elsewhere. So I think there's something there with like vibe coding is much faster and meme coins are much faster at pricing ideas than anything we've seen before. That being said, I just would add that you have to factor in the fact that meme coin traders are crazy, and the juice may not always be worth the squeeze. There was a weird situation last week where Jeffy Yu, who's the creator of Zora Bro, which is one of these AI agent things, like faked his own death to try to kind of escape that world he'd been in. Because once you've gotten meme coiners as your, and I don't know too much about the situation with Jeffy. I haven't spoken to him personally, but my guess is like once you're involved with these meme coin people as your, capital backers, like they have a like really crazy demands, and it can probably be like not the types of people you want investing in you. So I wonder if the juice is worth the squeeze, even though there is something interesting there.
Yeah, there's something to be said about the complexities that come with issuing a token. We see it with deep in projects where, you have to manage a business, you have to manage sales, you have to, manage a dev team, marketing, and now you have to manage a community. And the community might not be the most sophisticated group of investors or patient group of investors that you want. There's also like some negative signal, right? Like if the token goes down and you're a public, or sorry, if the stock goes down, you're a public company, people could safely assume that the market is pricing in something bad for your company. Not necessarily the case with crypto. Crazy things happen. There's a lot of leverage. Prices move in very unpredictable ways. So yeah, you're potentially adding a lot of baggage there. I think it's important to, reason about who should be launching a token on a case-by-case basis. And if you are you'll obviously have to manage community expectations, and I think of ways to drive value to the token over time. Like that's kind of the confusing part right now. Like docs on Believe are scarce. It's obviously in early stages. It's only been around for a few months, and in the current iteration, essentially just a few days or a few weeks. What's this platform going to evolve into over time? Like, will issuance or like token allocation for the issuing team be standardized? Will vesting be standardized? Like, these are some things where like I've seen public comms from the team on X talk about implementing them. Like their head's in the right place. There needs to be some standardization around issuance. But I think that like one of the cool things about the curation from the Believe team is like they kind of give you like best practices as a token issuer and what to expect, which no platform has done to date. So they're clearly thinking very carefully about this, because remember, their customers are on the supply side are Web 2. These guys are unfamiliar with crypto, and there's going to be a hand-holding and education process that Believe needs to go through. And I'm seeing evidence that they're taking it very seriously.
Today's episode is brought to you by Ledger. Ledger is a secure hardware wallet for your SOL and logins, trusted by 7 million users, and securing 20% of the world's digital assets. It's built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and assets. With Ledger Live, you can seamlessly manage and stake your SOL and now your SPL tokens, all while staying secure. From Bonk and Pengu to Jupe and Ray, 130 SPL tokens in total can now be bought, managed, and swapped on the go via providers like MoonPay and Exodus from the security of the Ledger ecosystem. I would be curious to hear I forget his name, but the Venmo co-founder who launched this meme coin for his like forthcoming video app called Jelly or whatever, the Jelly token, and that token obviously like spiked overnight, has gone down a lot. Interestingly, I was looking at it this morning. It is far from its high still, but it's been like spiking in recent days as the Believe app has taken off, which is interesting. But that token was kind of behind the like hyperliquid exploit, and partially I think because it was of outsized importance, but it wasn't actually very liquid, and like no one wanted to really trade it. So I wonder if like all PR is good PR when you're doing this meme coin thing, or if that's like going to actually have negative business outcomes for that guy once he brings the video app to market.
I don't know too much about the Jelly situation. I do think that there's this obvious problem, which is getting ironed out over time, and you're seeing it normalize, where crypto capital markets are very adjacent to meme coin markets, which are a game of chicken and market manipulation and games and retail behavior. So I think weird things are going to happen, right? And you kind of see it in like sex listings where they list a token, or they list, I forget what it was, like when Bonk got listed on Coinbase, it traded at like 50 cents for a moment or something ridiculous. It wasn't that egregious, but like you see these wild price swings because the participants in the market are buying first and asking questions later. But you're seeing that normalize, right? Like you're seeing fewer moves that look like Jelly. You're seeing fewer L1 tokens that trade at these insane premiums. The inability or the ability of people to just spin up an L2 and get multi-billion-dollar valuations is becoming less common. So the market's going to normalize. And it's not going to normalize tomorrow. And that's going to make for like a lot of good content and people on X to complain. But like the reality is like it's going in the right direction.
Mm-hmm. One question for you, Ryan, is you also went on the podcast circuit and critiqued Zora when it was coming out. And Boccaccio from 0x Research fame had like a good tweet where it was like some fat guy and then like Lizzo, I think. And it's like, just coin it. And then like the Lizzo one is like internet capital markets. Basically, I'm like explaining a meme too much, but like the case that this is just Zora repackaged. And you kind of made the case that content is worth zero. And so there's no point in coining things on Zora. Most startups arguably, or most ideas, I guess you could say, are also arguably worth zero. So why is it the case that you're bullish on Believe, but bearish on Zora?
So the bearishness on Zora, like, the thought that content is hyper abundant, it's non-scarce, so that the value should not be with the content creator but with the aggregator for curation. That is a secondary point. The more important point about Zora was that it was a token launchpad, and in order to appease like ETH natives who are more focused on like this like David and Goliath, like big tech versus little tech fight and creator monetization. To like appease that cohort of people, they removed all the useful features for a launchpad, right? So a launchpad, you launch units of value. You can trade those units of value. You need a price chart and you need a grid view to assess the relative ROI of different tokens, and they remove those features. And then they instead put very visual features which are not useful to assessing relative financial returns. So there was a mismatch between the feature set that you need for a launchpad and the features that you need for a launchpad were absent for Zora. So like the product didn't make sense. Believe is very different in that like these are actually scarce units of value. You like a cash flow stream is scarce. And again, if you squint and look into the future, you can imagine some sort of revenue share with token holders or rights to token holders. And most importantly, like I can look at the price chart on the Believe app and I can assess the relative financial characteristics of the tokens in the Believe app. So it's a launchpad where the features for trading and assessing potential financial outcomes are there. So for that reason, it's not a Zora. And to be clear, like Zora can fix those things tomorrow if they want. They can actually be honest about the fact that they are a launchpad and they don't have to mask it in a new Instagram and creator monetization and they can write that shit. But so far, I haven't seen them do that.
I will add, like, I think you and I have talked since the beginning of Pump.fun of curation for meme coins is really an opportunity. Like, if you go on Pump, it is not a website I like to be on. It's gross. Most of the meme coins are just like stupid. And so using the Believe app, it's like, oh, all of these are curated. They're supposed to be here. You click on them. It's like an interesting startup. I saw one that was like an AI bot that can access your social media history. And I'm like upset that Grok can't do that. Maybe there's like privacy issues there, but I'm always like, hey, Grok, based on my previous tweets, like tell me this, but it can't do it. So anyways, there's ideas that I think are cool on there. To speak for the Brooklyn crypto heads in the room though, is this thing like deeply unethical? Because I think you can, from 1,000-foot view, you're a founder with an idea. You are asking people or allowing people to invest in a meme coin related to your idea with the sense that you may build an app in the future, or maybe you already have or something like this. But you're given no actual equity rights. What we know about meme coins is they always trend to zero. The point is when you enter and exit. They do have an anti-sniping mechanism on Believe. I'm not sure how well it's working. I would think that insiders would figure out ways to trade these things just because that's the gravity of the world. I went to Believe's creator docs or whatever. And I was reading kind of their FAQs, and one of them said, "quote If you're not this is written to founders who could list their tokens on Believe. It said, if you're not promising returns, ownership, or financial rights, and the coin is clearly meant for fun, you're likely operating in a safe zone." So I think that's avoiding legal risk, but it's also like, man, like you're telling retail kind of to go invest in this thing, but not giving them returns, ownership, or financial rights. Presumably the founder makes a bunch of money off this. Like, isn't that pretty unethical, arguably?
I think it's context specific. If you have free and open capital markets and someone launches an arbitrary unit of value for this, I think the market prices it pretty appropriately. I think today, because of the middle ground that we're in terms of regulatory clarity, we see it on the horizon. Nothing's been passed yet. There's been signaling from lawmakers and regulators and frankly the president, but we don't have that regulatory clarity yet. It puts token issuers in this kind of like messy middle where you don't know what to do. Like, you need to remain compliant. Launching a token will be beneficial for you, your product, and the users and the owners of that token. You want to give it utility, but you can't. You actually can't. So what do? Do you wait until the moment that it's made legal? Because I know that, the move in tech actually is to front run legal regulatory change, right? So like, imagine like if Uber played by the rules or if Airbnb played by the rules, those businesses do not exist. The point is to kind of front run them or make kind of like the regulatory regime come to you. Because if you wait, someone else is going to pick up that opportunity and, Believe's not going to be the leader in this kind of like, launchpad for indie devs. It's going to be someone else. So, the app builders are like, they're going to be behind if they wait. So I think it's very context specific. Obviously, on a case by case basis, you have to assess the opportunity. Like, there will be people who try to do scammy things. It's permissionless open market, but I see Believe with their curation tools on top, and I see regulatory clarity like in the not too distant future, and that's exciting to me. And I'm willing to give most of the issuers the benefit of the doubt.
I mean, yeah, it feels like you're taking the cost of that risk and offloading it to your users essentially, where like you probably could add some kind of promise for like access to future equity for the people who hold your meme coin or something like
But then
that.
that would be a security, right?
But like there's a world in which
That
that's
would be
okay.
that would be issuing a security too. Like you'd be issuing equity options. So you kind of like you can there's a point where you can't, and issuing a collectible today is it's where you can do it.
Yes, but like there might be a world in which you can still make that work. I think like Trump's meme coin has security like functions with how he's, offering a dinner in exchange for like or for the top 220 holders or something like that. Um like but it seems unlikely that Trump himself will face like legal recrimination for this. So it's like you might be okay if you're Believe, but you're taking the legal risk and you're saying, well, we'll just let our users bear the cost of that in terms of they get no actual rights or benefit from holding these tokens, but they're okay with it because, as you mentioned, like as we saw with Zora, there were some buyers. Like no matter how much you insist that this token is not going to have value, people will want to trade it.
Yeah, I think if you go to the Trump website or the Trump coin website, you'll see that they like say like this is this is purely a collectible, and I think there are like I'm not a legal expert, but like clearly a lot of token issuers can get away with like gated access to things. It looks like a membership card rather than a security, something that you'll one day have the rights to cash flows for. I think there's probably like a good line in the stand, and you have good like you can defend yourself in the court of law if like this thing represented a dinner and there's no DCF that you could do on a dinner, right? But yeah, I mean, I wouldn't put it on the founders and the platforms. I think at the end of the day, it's it's the legal environment that we've been through in over the past since Biden was in office and Gary Gensler was at the helm. It's frankly, it's those guys' faults that we're in the situation that we're in today. Regulatory clarity should have been like an 8-year ago thing, and it just never happened.
One question I had for you, Ryan, is as I was playing around on Believe, there's like a new tab and a featured tab for Believe projects. And as you mentioned, there's this curation around the meme coins that they will list, which is maybe an edge over something like Pump.fun for user experience. But if that's the case, your power users are going to run out of tokens to invest in. And if you're while the vibe coding era does allow you to have many mini apps or projects more quickly, it is still more finite than, hey, like upload a JPEG and then launch a token. And that was kind of the thing that propelled Pump.fun. So is there a ceiling on Believe, I guess? Like, are people gonna in 3 days be like, hey, there's no more fun ideas to invest in. I'm all done with, venture meme coining and I'm gonna go back to Pump.fun?
I think no for the earliest. Well, I mean, they're gonna have their own niche. I think Pump is clearly a fun game of chicken that's achieved incredible PMF, and people are going to play that. And I think you could have a subset of people who want to play the growth hacking startup game where you're investing in hyper micro cap tokens that like have a real future. There's obviously going to be some overlap between the two markets because just at the end of the day, a lot of people in crypto just want the 10x or 100,000x whatever. But I think that like look, these market caps should be small. Like a $20 million outcome in market cap terms, let's assume it's reasonably valued, is a fantastic outcome and a great valuation to have a tokens trade at in steady state. So I think the fact that you see multi-million dollar market caps in the hundreds of millions, that's far too high for this niche that Believe is targeting on the supply side. So any moderation lower in market cap for the current set of Believe tokens, I think is healthy, because that would be a realistic assessment of the financial outcome for the things that are launching, or the things that are launching on the curation layer of Believe today. I think, like, no doubt, like, the game could run dry, right? Like, the timing could be poor. Like, there are only 15 million monthly active users on Phantom. There are 40 million monthly active users for Be Real, which is, widely considered like a not so great kind of successful, probably not consumer app. So we're still pretty early, and this might be early. So if it fizzles because there's just not enough people, there's not enough capital, perhaps there's not enough ideas, like, I won't be surprised. But I do welcome any moderation in the market caps that we're seeing coming out of Believe, because of course they're a little ahead of their skis. They shouldn't trade to, Mudang levels, right? They need to moderate to small business levels.
Yes, the paragon of value, Mudang. No, I mean, I think, like, the every social media app, I mean, I guess except to Be Real, now that you bring that up, but most social media apps have this concept of the infinite scroll, which is enabled by an algorithm where it'll just keep feeding you stuff forever, and it literally never ends. And, like, Believe is finite; it will end, and I do wonder if, again, this becomes another thing that we talked about for a week and then never talked about again, as maybe the case with Zora right now.
Well, Believe Believe is not a social app, right? So, like, it doesn't need, like, it's a financial app, I think. So it doesn't need DAUs. I think ideally you're a weekly active or a monthly active user of Believe. You're not an everyday user of Believe. And if you're not targeting everyday users, you don't have to be infinite scroll. And I think that's why you don't see infinite scroll in a lot of financial apps, because it's just like, you shouldn't be investing every day. It doesn't make sense in these hyper niche consumer markets. So I don't think that it doesn't need that type of engagement.
Today's episode is brought to you by Ledger. Ledger is a secure hardware wallet for your SOL and logins, trusted by 7 million users, and securing 20% of the world's digital assets. It's built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and assets. With Ledger Live, you can seamlessly manage and stake your SOL and now your SPL tokens, all while staying secure. From Bonk and Pengu to Jupe and Ray, 130 SPL tokens in total can now be bought, managed, and swapped on the go via providers like MoonPay and Exodus from the security of the Ledger ecosystem. What about something that doesn't get talked about as much that I think is interesting? And again, the docs are kind of scarce, so I've had trouble tracking down how exactly this works, but they have some kind of partnership with Meteora where the bonding curve that these Believe tokens trade on have an anti-bot mechanism where the fees are initially higher until it gets to a certain market cap, and then the fees drop. And this is meant to discourage what is, I think, the worst thing about Pump.fun, which is that a majority of tokens are bought immediately after they're launched, like in the same block, meaning that, if you are just a user who's browsing the meme coins looking for 1000x, like, chances are you're already late the moment the token launches. So if you can make it economically infeasible to flood the zone and snipe up all the supply, like, that would be a good thing. No one seems to be talking about it. Do you think users really care either way?
I think at such low market caps, no, I don't think users care. And I speak as a user myself and someone who's observed a lot of, meme coin user behaviors, is that it's small pennies at those market caps and the amount of money that people are putting into these things. And it's a lot like sports gambling, I think, at these ultra low market caps, especially on the Pump.fun side. You expect a payoff similar to, a multi-leg parlay. So to pay that kind of fee is kind of irrelevant. The people who are playing the game, they have money to lose. I don't think it matters so much. But I think it's a unique mechanism, right? I think it's pretty exciting. You need some sort of Sybil resistance. I think you need more Sybil resistance in sniper resistance in Believe than you do Pump.fun. I think Pump.fun still works with snipers. I know that might be a controversial take, but it's kind of like it still works, and it's clearly still working. On the Believe side, you don't want a token that's pseudo equity or 1 day equity to be like sniped and then distributed, and potentially see one of those massive down candles. That would be bad.
Yeah, I do think though that like these things still can and will be sniped, because even if the fees are a bit higher, it's like if one of these Silicon Valley growth hackers launches a coin, like someone could set up some script to just immediately buy it when it happens, and like probably will. So it's like maybe you're not throwing spaghetti at the wall like you would be on Pump.fun, but you still can like bot these meme coin launches. And if you know that like the creator that you're sniping is likely to, get put on the Believe app and have really good outcomes, then like it's going to be profitable even if you pay a higher fee, obviously. So I don't know if this really does away with sniping necessarily. I guess it's nice, and as you point out, like you probably do need something like that. But ultimately I would agree, it's like this stuff is good for Twitter engagement, but I don't know if it's actually reflected in user behavior, how heavily like sniped, insider traded, whatever you want to call it, so many of these tokens are, which is sad and discourages my own personal use of them. But I think that like, yeah, the market and just wants to look for the next 1000x before everyone else has found it.
Yeah. I think like put yourself in the builder's shoes. Like there are so many issues with all these apps, even the good ones. There's massive issues, and from bugs to unethical behavior to Sybil problems. But at the end of the day, like one core feature matters. It's like and for Pump, that's just the ability to participate in this game because it's pretty fun and it's attractive financially, or potentially attractive financially. I think that they want to solve it. I think that they'll find ways to mitigate it over time. It's going to be a cat and mouse. But at the end of the day, it's not going to stop. It's not going to stop fun from being successful for the same reason that like Mev is not going to stop a chain from being successful, or it's not going to stop NASDAQ from being successful. Like there are costs and benefits, and the benefits outweigh the costs.
Let me bring up one other point that I think Believe reminds me, or we're speaking about Believe like it's very novel, but it strikes me as just kind of like Kickstarter with meme coins. Like this idea of crowdfunding ideas for people who maybe wouldn't have venture-like outcomes or just don't have access to other forms of fundraising, like already exists in the Web 2. And Kickstarter is on Cello now, so it actually is in Web 3, which is a very random thing. So I don't know, like why... And to our earlier conversation about securities laws, like Kickstarter promises you, I don't know, a T-shirt or like a version of the board game that you're funding or whatever it is, and they seem to have done fine. So like, what is meaningfully different about this than Kickstarter? And if Kickstarter did the securities thing, why can't Believe?
I'm not familiar with the Kickstarter product enough. I would assume that there's some KYC and some accredited investor screening to participate, I would assume. And there's also, I believe that there's a carve out in the law where it's if you're raising a low enough dollar value from few enough investors that you don't have to go through that normal flow. But again, not a legal expert, but I think that those may be the core differences. I think in terms of the novelty of it, like, I don't think novelty matters at all. Facebook, it got its name, the Facebook, because it was a copycat of all the college Facebooks that they were using so that you understood who you're going to be in class with for the incoming class. Snapchat did a really cool thing with the Reels like feature, and then Facebook copied it, made it Reels, and like it's successful Instagram copied it, and now it's Stories. I don't think it matters that things are novel, and I think the best example of that is Pump.fun. Pump.fun did nothing new. All they did was observe that there was incredibly high latent demand over a 10-year period in crypto for launching arbitrary assets, calling them funny names, and trading them and hoping to get the next 1000x. And all they did was take those very popular features, bundle them into a product, minimize the friction to accessing those features, and it became its own thing. They did nothing novel. And I think a lot of consumer apps are the same way. They simply observe that there's already this demand for this service, and they package it in a better way. The go-to-market's better, the marketing's better, the viral feedback loop is better. Something about it is better. And so I don't, Believe is not novel. But I think it'll be like the little things that they do on the edges that could potentially take it from, here to here.
Mm-hmm. Yeah. I think that was most of what I'd wanted to get into on Believe. I guess these past few days of Believe mania, our last few days of believing, Ryan, has it changed the way that you think about like consumer crypto, or is there a big takeaway you'd give the audience as to what this says about consumer crypto?
Yeah, I think consumer crypto is here objectively. For anyone who's willing to see it, it's here. And it is a very specific thing. It's highly financial. I don't think that it's decentralized Instagram. I don't think that it's decentralized Twitter. I think that it's fun, gambling adjacent consumer apps that have some unique unlock. Pump.fun is the best example of it. The thing's generated cumulative $700 million since launch. It's just, and you see founders increasingly leaning into very obviously what consumer crypto is, which are these highly financialized experiences. So it's here, and it's going to be super exciting because regulatory clarity is like on the horizon, and going to be a better setup.
It's been fun as always, Ryan. Thank you so much for taking the time to chat, and looking forward to hosting you back on the pod very soon.
Thanks for having me, man.
All right, everyone. Appreciate you all tuning in. Please like this, 5-star it wherever you get your podcasts. If you enjoyed this episode, share it with a friend, and we will see you all again in the next one.